protection and income. Before we get started and look at the markets that I've been showing previously, just a quick few house rules here. We do have Nathan, my right-hand man, manning the chat box there. So if we do have a little bit of time at the end of the session, then you're more than welcome to send some questions through with regards to obviously trading, maybe some markets that you would like me to have a look at. We'll have to finish the session within 30 minutes today. We again have some things that's scheduled for a little bit later that we need to attend to, so we'll have to try and keep it short. This obviously after I've gone through everything that I would like to show you. And as always, guys, please, the stuff that I'm showing you here is my own personal analysis and does not constitute any trading advice, but only reflects my own views and opinions about the market. Alright guys, last week we started off with a look at the ES. This week I also want to have a little look at the Dow Jones Industrial Average Index, or the Dow Jones as it's called, DJI. Some very cool market geometry that I'm seeing on here. I'm doing some long range work using pitchforks in the majority of the cases with my work. I want to switch to a 1 month chart and have a look at this massive parabolical move that we're seeing to the upside over here. Now, I want to anchor the pitchfork, and this is now set to the auto, so this is not a log scale. I'm going to actually discuss the log scale a little bit later. This, in my opinion, from the bull run that started off this small recession at the end of March 2009, and this was that housing crisis that we've experienced in the US, and then price moved up. So I think these are the important anchor points, starting at this low to that high to this low over here in September, October. This is now on a monthly scale, 2011. Now this pitchfork, and you've probably seen previously on the ES, I doubled it up. And this is also set to a shift setting. Now this is a very visual tool that can work really well as angular support and resistance into the future. But you'll quite often have to tinker with things. And since we've had this massive bull run, I mean, it's just been insane. Even on Dow Jones Industrial, it's just been a massive move to the upside. If you change things using that same anchor point, but go to a log scale, then you'll see that that same pitchfork obviously changes now. So those of you who don't know what logarithmic scale is, it's basically a way of displaying numerical data over a very wide range of values in a compact way. And when you do perform market geometry on a log scale, it will look different than on an auto scale, or the normal scale that we all watch when we trade and view our screens. But what is important here is that you can clearly see how well this pitchfork has contained price here. Now we did have that undershoot below this low red warning line, as we would call it, but price failed to close below it. Very interesting though is if you would take the same width from your lower to your low median line to your low red warning line, you know, all these widths are obviously the same and run parallel to each other. And you project it down here, although it undershot here, price also halted pretty much to the T at the same, I'm going to say, parallel distance than these median lines spaced with each other. So very cool to see. And you can just very visually quickly see how well price has been contained within the boundaries of this pitchfork. Now, let's just move out to a daily chart. Bring back our outer scale and remove, let's keep it on log. Then I'm thinking that we are seeing the end of some sort of ending diagonal in Dow Jones Industrial, meaning that we can still move higher. And if we can move more higher, then we're probably looking at strong resistance for a possible top, perhaps even this year, in the Dow Jones Industrial Average. And obviously this will change as the longer price takes to get up there, but right now it lies around about 35,920, plus minus obviously, guys, and at the upper level about 36,200. In the bigger scheme of things, since that low and using that as the current bullish phase, let me just go back to the monthly. Oh, let me just move out. Sorry about this. Then we've already discussed this, what happened over here. This was a clear expanding triangle. Now, triangles, especially when they take a long time to develop, tend to appear, according to Elliott wave analysis or theory, as a penultimate, correction prior to a high or a low. So what I'm thinking we're seeing here, and this is just running into this high now, and price obviously approaching this upper median line again, is that we are likely have seen a 1, a 2, a 3 where this triangle formed. End of the triangle was a 4, i.e. an A, B, C, D, E, 5 waves, and now we're moving higher in a 5th wave that is running at a parabolic sort of blow-off move, as we would call it. Now, this in the bigger scheme of things is not, I would say, that we're going to get one hell of a massive correction here. I'm thinking just in this bullish phase over here that we're very near to a possible high. And if you remember what I showed you on the ES, price now already hit that important zone that I've shown you before. If you've not seen it, then please go and review my previous videos. It is dangerous times at the moment, but if you're to look at the daily again, on the Dow Jones Industrial, if we head into this area, then I'll be very careful of holding any long positions. And obviously, this can also act as a sort of a barometer of what other markets might do, i.e., for example, gold could strengthen and stuff like that. Also need to be aware of that this week starting tomorrow, we have a 3-day Jackson Hole Symposium starting, and that concludes on Saturday. So this is typically attended by all the big financial who's in the world, and they're probably much going to be talking, I think, mostly about these interest rates and when they're going to be hiked and all that sort of stuff. So this week will be very interesting to see how the markets react, and it might set the tone directionally wise for the next couple of weeks or so. So that is my opinion. I think this is my forecast, and I would like to stick with this. I think on the Dow Jones Industrial, just to show you between what's happening here and also on the ES that I showed you previously, that we are approaching very, very strong resistance areas. So be careful. Okay, so let's quickly have a look at the dollar index, and I'll have to take my log scale off here. Guys, again, review my previous videos if you've not seen this, because we have a little bit of limited time today. I don't want to be going on too long and bore you with some of this stuff, but hopefully you are here to try to get a bigger picture of what might be going on in the markets. If we look at the weekly scale, I'm still viewing this as a correction that's not ended just yet. It was either that or we're forming some sort of a big triangle. If that is the case, then we've probably seen an A, a B, a C with a D going up, then an E, and then go higher. But I still think that the stronger count, in my opinion, would be that we not done with a very large multi-year ABC movement to the downside. And that could very well carry us. Let me just move that setting to a shift. This is my go-to setting when we're dealing with corrections. That we could still easily see price, in my opinion, break this low in February 2018. And obviously this year's lows that formed in January. Now, if we look at the shorter term price action, let's just go back to the daily time frame. And, I'm showing you guys the, sort of the major markets that could influence things like, for example, dollar index will obviously have a huge impact on your major forex currency pairs. So, this can be used again as a pretty good indication as to, you know, where the euro, US dollar, pound, US dollar, Japanese, and yen, and those bigger sort of currencies might move towards a core by just watching the dollar index. And obviously watching the dollar index can also give you a good sense of what the gold and silver and the metal complexes might do as well. So before I explain this, I just want to go to a shift pitchfork. And you'll probably remember from my previous videos that I've been looking at the dollar index for a while. And I was saying that we're still going to head higher, or potentially could move higher. And we're probably going to break this high on the 30th that was set on the 31st, that is, of March this year. Now, this has happened. And then probably when a lot of people thought this is going to explode to the upside, it reached the upper median line of a shift pitchfork using these anchor points, start of the year to March this year, end of March this year, and to May low. And those three anchor points, we can see the price now perfectly reached that center median line, and we had a drop lower. I have to say, though, that tomorrow, the start of this Jackson Hole Symposium will probably cause some increased volatility, especially in the currencies. So something we definitely need to be aware of. But I won't be surprised, and this is a pretty wide range, and I've got it at the moment from where price reversed around about the 93.64 level, going all the way up to about 94.20. And the only reason I'm doing that is that if I were to switch between my pitchfork settings, we can see that either the shift pitchfork or the standard pitchfork is working really well as support and resistance, i.e. the angles on the median line. So price has not yet reached that center median line again. It has previously moved lower, kind of on a shot this low 50% median line, found support again, and I won't be surprised if we're going to continue creeping higher before we actually get the decline that we've expecting might happen. And that decline could be pretty aggressive and, you know, maybe even last into next year. Obviously can't tell you exactly when that's going to happen. I've got no timing involved with this whatsoever. But also very important here is that this could either have been an A, B, C, X, and now we have an A, a B, and then a C to carry us until about the October sort of time frame, which might even put prices much higher. So this is why we continuously update these sort of things. I think that we can definitely still see a few days of decline here. Again, we'll also have to see what's going to happen in this 3-day symposium event. But we do get a decline. I still think we can head higher on the dollar index. If this was a WXY, then it's basically two ABCs connected by an X wave. Let me mark that out for you quickly. A, B, C, and then you get an X wave, and then you get either now an extended A wave with a B wave and then a C wave lower, or we just had an ABC. Either way, I don't think we're done going up. So I'm also not really going to be getting into any sort of major forex pairs while the symposium's going on as well. So that's my projection. I think we might have seen the end of an A wave with a B wave to follow and another C wave higher to complete a WXY pattern, and then see a much larger move to the downside that could potentially take out the lows that were set in January this year. Okay, and that brings us to gold, which we also had a look at last week. So what's working here? I mean, we have this very long sort of up and down moving pattern that started last year, August. I'm viewing this as a very large fourth wave correction. I probably would suspect that gold could go back up to new highs at some later stage. I'm a little bit on the sideline on gold at the moment, because every single time you think it's going to go down, you get the strong V-shaped sort of bottoms, strong reversals, V-shaped tops, like we've had all over the show. This to me is very, very, how can I say, it shows the characteristics of what a typical fourth wave correction would do. Now, to be dead honest here, did we have an A, B, C? Did we have an X now? Are we going down A, B, C again? From a market geometry perspective, let me just look. I think this pitchfork's working really well. We might be heading into this sort of upper median line of C resistance. We could obviously see that resistance happen sooner. And why do I say that? If we run a line parallel to one of these median lines and project it to that previous high, then we already reached that channel or that same angular resistance line already, and we're seeing a little move to the downside. Again, also would be interesting to see what happens with gold over the next couple of days. Obviously, we're not trading over the weekend, but the symposium does end on Saturday, and maybe the markets will still digest what happened going into next week or the start of next week. Either case, we had a triple bottom sort of scenario happening over here, and I think if we do reach this low, we could go even lower. I still think that we're not done with gold moving lower, but I can't say are we going to break these lows or so. You know, fourth wave corrections are typically things as soon as I think I'm dealing with one, it's not a market that I want to get involved with. Yes, maybe in short-term swing trades, but in the longer term, I think we can still hit lower on gold. And subsequently, that ties into what the dollar index might do, i.e. going higher. Now, higher now or higher later, we'll just have to wait and see. But that is my sort of forecast that I have at the moment. Guys, we also looked at natural gas, where I gave you this area where we might see a reversal. We did have one. But I also mentioned that in my previous video, that we got to watch this area where we're at previous highs. And this for me is still a line in sand between 3.75 and 3.80. If we break this properly and stay below there, then we might continue lower, possibly to this previous high in Feb this year, around about the $3.30 sort of handle. That being said, it does look like we have had some sort of a five-wave move down. We might correct higher. I would not be surprised if we see some sort of topping pattern. This happens quite a bit in natural gas, i.e. a distribution sort of pattern, and then see a much larger move to the downside at some later stage. Mahmoud, welcome back, buddy. Thanks very much. We quite often hear from you on this channel. I actually have Bitcoin loaded. You can see it down here. I'm going to be tackling that in the next couple of minutes. Very important. Well, I would say I've done some market geometry on this for quite a few people that follow Bitcoin, and it's been extremely accurate. So I'm going to show you the lines that I've had on my chart for quite a while and where we're currently standing in Bitcoin. Any case, crude oil, I also don't think crude oil's done. We either had in this high here, we've been looking at, since I started these live sessions on crude oil, around about this sort of area here. Previously, I drew this funny looking channel, which obviously doesn't catch these highs and the lows, but I did explain that if you copy and paste these channels and project them up and below, they do act as really good angular support and resistance areas. Even if we apply it to that area over there, we had support, couldn't break below or stay below support, and then eventually move to the downside. Now, we also had this upward sloping channel that was controlling the market for quite a while into this top, and price might now be pulling back into that area, and upside of that channel projected from that high. And this currently lies around at 68.90 to probably a little bit higher, about a 69.80 sort of area where price might be moving back into. We also have crude oil inventories a little bit later today, so we'll have to see if that actual supply that was agreed upon between OPEC countries, if it's actually starting to filter or reflect in the markets, and if that will change the how can I say, the bias of the majority of the traders, i.e. if more supplies come in, one would think that the price of the market would go lower. We either have a WXY that either completed now, but I'm also thinking that we might even head lower on crude oil. So if you're long crude oil, be careful. We're at pretty strong resistance now. If we do go high, we might see a retest of this lower channel line and see a much larger move to the downside again. Okay. Before I look at Bitcoin, last week I also mentioned that we're still looking at the Euro-US dollar. Here I'm interested in a very long-term swing trade to the upside. I think this is also some sort of a fourth wave, a very long drawn out one. It started in January, obviously very similar to inverse of what the dollar index has been doing. So if the dollar index is not done going higher yet, then Euro-US dollar might still even move lower. Now, if we have interim weakness in the dollar index, we're probably going to see some strength in the other majors that trade versus the dollar, and then see a move to the downside. And I'm not predicting this is going to happen, but one of my favorite patterns to follow is that if we start seeing some sort of grinding move to the downside, I'm not saying this is going to happen, but if we do start seeing some sort of ending diagonal, then that would be a really good signal that the Euro-US dollar could be approaching the end of this long-term correction, or should I say a correction started in the beginning of this year, and then see a continuation of the larger upside trend. Mahmoud, my man, let's have a look at Bitcoin. Some reason TradingView has been loading very slowly. I just want to get rid of that and open the screen. I wish I could show you of mine. He's in the crypto space. I've done a private analysis for him. Let's just quickly not get rid but hide that pitchfork for you. Let's look at what happened prior to obviously this massive bounce to the upside. Now unfortunately I got two different interpretations of what's happening in Bitcoin. My favorite interpretation was that this zigzag three-wave move to the upside. Let me just have where's my drawing tool? Let's just use that. It's a clear three-wave move. In my opinion, this does not look like some, a three-wave pattern. It's not how typically a bullish move concludes. So when I've seen this and we had a subsequent breakout to the downside, let me just get rid of this. I was saying that we might be or going to see an expanded flat. So you have a three-wave move and then an expanded flat C wave which runs in five waves, and we had that. We had 1, 2, 3 that ended at this low median line. I typically like to anchor standard pitchforks, and this is a good tip for you guys if you understand how expanding flats work. You quite often have a very fast-running C wave that traces out in five waves. If you think you know where the high was, this was actually correcting higher in my opinion, then labeling this, I think and forget about where I started this from. I think this was a third wave high. Oops. And now we might be going higher in a third wave. So forget about that now because we have limited time looking at this. Then we had a correction to the upside, a potential, and this was actually lower than that. But if you look at momentum divergence, typical. Price reacted from the lower median line, and we had 1, 2, 3, 4, 5 waves to the downside, and we've now seen 5 waves to the upside again. We still have a few minutes. Quite often you'll see your C wave end at a very important fib extension level. And here we have a 2.382 to the T where this ended, and then price reversed lower. Or should I say to the T? I must just get my lines properly on here. Yeah, so we had very, very close call to the 2.382. Typically, this is what you're seeing in markets like Bitcoin, because I mean, this is a different beast. It can be very volatile. You can quite often see price extend quite far below your fib extensions that you normally expect when you're dealing with expanded flat C wave. But if this is my first scenario, I think that might have played out. We have a 1, 2, 3, 4, and a 5 that completed a C wave. Let me just label this as smaller. Let's go minuet there. Let's change it to a different color. Oh goodness, I'm actually doing the wrong one here. Sorry guys. Just bear with me for a minute here. I wanted to change this one. Yeah. Then we have a third wave high. Actually, here it might be very weird for you to think you can correct higher, but this is typically how expanded flats work. And then you have a C wave that runs in 3 waves lower. And the larger pattern will be labeled as A and B and C. To complete this larger 4th wave after 5 waves for the C wave, and we could potentially now have seen the first bullish move higher of a potential move, new move to the upside. That being said, with my line of work, I always have a plan B, and my plan B still would point that we could go lower, and that this, if I'm wrong about what happened over here, that this was 5 waves lower of an A with a B wave now. And now we're heading lower. We might head lower soon in the C wave. And even if that happens, I still think, and I've got other market geometry I've done here, with price that could reach the 20,000 to 22,000 level. And then see the move high that we wanted to see, or that we've been waiting for. So both counts are bullish over the long term, where obviously the first one, it's still my ABC expanded flat correction, still being my favorite interpretation of what could be happening here. And before I finish off, we've got 3 minutes. Let me just bring back those things that I took off here. Oops, let's take that away. What's that? Wasn't that? Yeah, okay. Now, the current move higher. Let's hide this a little bit. Clear things up here. Let's get rid of this. Using the 3 price swings prior to this parabolic move, strong bounce to the upside, and price has been hitting the center median line, pulled back. We hit it again. Now, if we make a fib retracement from that high to this low, then we were very, very close to the golden ratio, 0.618 fib retracement level. It just missed it. Doesn't necessarily have to say that we might still move a little bit higher in it again, and then see a correction, and then another move to the upside. But in my opinion, we also have momentum divergence, which is something I look at some of our indicators that we use for our members, or that I show my members at this area. So we're not following this at the moment, but this is private analysis I've done for a friend a little while ago that's been following my work as well. So we at an area, we might go a little bit higher, but watch out if we hit the 0.618, around about the 50,953 level. A little bit of a funny number, but in any case, we've also got rejected at the $50,000 level, which was obviously being watched by a lot of analysts as well. And we might now actually get a deeper retracement to the downside. All right, Mahmoud, hopefully that helped you, my man. I really do like this first interpretation from a market geometry perspective, and also Elliott wave corrective perspective, and also using a bit of fib work here. That really played out pretty well. In my opinion, I've already been long Bitcoin a little bit on some of the exchanges here that I just bought some Bitcoin, but not around about here. I got long a little bit late. So, but also just be very wary that I think if this is a first start of another move to the upside, it might break these record highs that Bitcoin set in April this year. Then we might only be seeing the first phase higher. So very normal to expect that we can see corrective moves to the downside. And I think it might be very near to a deeper correction. Right, guys, listen, that's it. I need to run. Thanks very much for listening. You know, if you're interested in this line of work, market geometry, my type analysis, we have some fantastic services to offer. There will be links in the chat box that Nathan dropped there, so please go check that out. Sorry I had to cut things a little bit short today, but we are out of time. If there are any questions regarding to any of the analysis today, you want me to have a look at any of your future or your charts, then please drop comments down there in the comment section below this video. We'll be more than happy to reply to you guys and perhaps review those markets during the next session next week. And that's it for today, guys. Thanks very much.